Commercial property insurance for small businesses. What is it? What's covered? How do you get it? And what does it cost? We're going to cover this and more coming right up. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. As an expert business insurance broker, these videos are intended to help guide and educate decision makers to help make you a more informed insurance buyer. If I don't answer the question on your mind that actually brought you to this video, reach out and let's connect. I'd love to hear from you. Oh, and if you find this video helpful, do me a favor and hit that like button and subscribe. All right, so commercial property insurance is a broad topic. Let's break it down to make this a bit more understandable and how it's structured. Commercial property is typically broken down into the following elements or types of property insured on a property policy, and they include buildings, business personal property, such as the contents and inventory that you have inside your buildings, machinery and equipment. This is especially true for manufacturers who segment the value of their machinery. And then there's business income. This coverage was previously called business interruption insurance, and it protects a company's cash flow following a covered loss. Those are the major headings in most small business property policies. In addition, you may see coverage elements such as tenants' improvements and betterments, which means it's meant to ensure the actual improvements a tenant makes to a rented or leased space. Electronic equipment. In some businesses, if there's a large value of computer servers, they may be segmented here from the contents limit. And then there's refrigerated or frozen property that's subject to spoilage. Typically, commercial property is insured as part of a package or BOP, business owner's policy, which also includes general liability and other needed coverages for many small businesses. Regardless of how commercial property is insured, there are a few issues that need to be reviewed, including the following items. Number one are the perils the property is insured against. In most BOP policies, broad all-risk coverage is provided, but in standalone property policies, you may have the option of all-risk versus named peril coverage. So what's the difference? All risk, as its name implies, provide broad protection to property for all perils that may arise other than those that are excluded. Common exclusions are flood, earthquake, gradual deterioration, and many others. Named peril coverage, on the other hand, only insures you for the perils named in the policy. Coverage is often called basic and extends only to perils such as fire, wind, hail, aircraft, vehicles, explosion, and smoke. Broad all-risk coverage, of course, is the preferred method to use. Number two on this list is coinsurance. Coinsurance is the percentage of the full value of the property you agree to insure for. Most BOP policies require that property is insured 100% of its replacement value, and we'll discuss what replacement value is in a minute. On property policies where the coinsurance amount is stated, usually as a percentage, say 80 or 90%, that means that you agree to insure your values at least to 80% of the property's replacement value. The good news with coinsurance is that you can elect to insure less than 100% of the value and save a few bucks. But the bad news about coinsurance is that if you don't meet that 80% level in this example, you'll suffer what is known as a coinsurance penalty. And this is where it can go sideways. The party that decides the replacement value of property following a loss is your insurance company, and they will use the acceptable standard replacement cost calculation of, say, your building. Now you may think, oh, I can replace this building for $100 a square foot, and you insure it to that value. When there's a claim and your insurer says it'll cost twice that to replace it, now you've got a problem and you'll be penalized and become a co-insurer in settling that loss, paying a percentage of the claim out of your pocket. You can see more about coinsurance in this post here. The point is that insuring your property to its full replacement value is really important. Then finally, you've got issues such as blanketing coverage across multiple locations if you have them, property insurance enhancements such as ordinance and law protection, and then there's deductibles and many other issues to deal with. The point is that property insurance can be complex. Guessing at what you need or how much you need can lead to problems, which is why I don't think that buying a policy online without the help of a skilled broker is a big mistake. And when you combine coverages into a BOP or business owner's policy, you've got more choices and decisions to make, making the role of the skilled broker even more critical. Here's the bottom line. Your business may be the most valuable asset you own. Protecting it properly is important, and using a broker who is skilled and experienced in commercial property insurance usually doesn't cost more than doing it yourself. Looking for help, want expert guidance, and a choice of the best insurers in America? Then contact us at the Coyle Group and let's chat. My contact info is in the description box below, and I'm sure that we can help you get the right coverage at the right price for your small business. Thanks for watching, and if this video was helpful, do me a favor and hit that like button. Thanks.